Then the other, many people say this, the good news for India is that oil prices are falling, commodity prices are going down because we import so much oil and commodities. We also export commodities, of course. So what's happening on the commodities front? Let's have a look at that. Ruchi's data shows that commodity prices are falling. If you look at this year in red, the decline is very sharp. But the key point that Ruchi's analysis, 200 years of data, shows that it's falling, but it's falling to the 200-year average. It's not like it's falling to some unheard of bottomless pit. We've been here before, and in fact, it's the average. So these are corrected figures for inflation over 200 years. And if it means we're just hitting the norm, it doesn't mean that we've gone so low, there's bound to be a bounce back in commodity prices. Is that what you're trying to say there?
Yes, I think so. Because 2 points here. One, that in inflation-adjusted terms, commodity prices do not increase over time. Right. And that's because there's always a supply response. Human ingenuity is always something which trumps any increase in demand over time. So the population of the world has increased over time. The demand for commodities has increased over time, but the supply response, as we now see even in the US, the shale gas and the shale oil which came to sort of respond to the big demand increase of the last decade, there's always a supply response which comes. Right, and so therefore commodity prices over time do not increase. But the pattern we typically tend to see in commodities is that you end up getting a big shock, and so commodity prices rise for 1 decade, and then typically for the next 2 decades, they spend their time giving up the gains they made in the previous decade or so. So I think that
boom for 1 decade and then a kind of
a long bust, which typically lasts. That's the historical average.
The interesting thing is that people are saying, oh God, never seen commodity prices so bad, it's terrible, but actually it's back to normal.
Yeah, because the pace of decline has been rather sharp of late.
Right.
But if you look, this is the classic anchoring bias that we have all sort of had gotten used to what commodity prices were last decade. But we forget that even in the year 2001, the price of oil was $20 a barrel, right? And now we are at $35 a barrel. So the fact is that oil prices did go up a lot, and they've collapsed in the last 18 months or so. But on a long-term basis, oil prices are not that different from what their inflation-adjusted average has been over the last 100 years.
But you know, one thing that really gets my goat, all you guys, when the oil prices go up, oh, it's terrible for India. Now they're at their rock bottom, we are saying, oh, it's terrible. Let's have a look at the oil prices and the kind of glut we have around the world. This is a stockpile of OECD countries. They're mostly developed countries, but some others as well. Amount of stocks of oil they have. And look at that sharp increase, way higher than anything they've had since 1985, which tends to suggest, I suppose, from this, are you trying to say that with that kind of a glut, you don't expect oil prices to go up? So, but why don't us ordinary citizens benefit from a lower oil price?
No, I think that, as far as oil prices are concerned, like they'll fluctuate. I mean, it's possible the price of oil falls below $30 a barrel and then bounces back to 50, 60 or so.
Right.
But it does seem that, sort of the last decade, it looked as if $70 to $80 a barrel was the floor for the price of oil. And then, like it went up to 140. Now I think that 70 to 80 is the peak for the price of oil over the next 10 years or so. So I think that is
That's a huge statement.
Yeah, I think that's really what is my sort of basic calculation. So they may not fall much further from here, but their upside, I think, will be capped as we have so much supply in the market to take care of any increase in demand that may take place down the line. Now, for India, as to why has this not been an unequivocal...
Yes.
Yeah, exactly. I think that, again, there's a threshold level. If you remember even last decade, when the price of oil went up from $20 a barrel, right up to $70, $80 a barrel, India was doing just fine. And that's because global demand was booming. And so that was compensating...
So you're saying at $20 a barrel, global demand is also affected, global economy is affected, and that affects India. But when it goes to 70, global economy, like for example, shale in America, it costs maybe $60 to produce shale. And if it goes down to, if oil price goes down to 40, they start closing down, I guess.
That's right. So like in America, that's what we're seeing. One of the biggest risks to the American economy in 2016 is that many of these energy companies are likely to go bust because they borrowed a lot, assuming oil prices would be much higher. And now they don't have the profits or the cash flow to repay that debt. So there is a sweet spot. And I think that there's a sweet spot for oil which suggests good news for India and the global economy. And that's what we spoke about last year too, that when the price of oil was about $50, $60 a barrel, that's possibly like a sweet spot.
I love that, a sweet spot. That means going lower than that doesn't benefit India, even though we're importers. Going above that certainly is the traditional thought that high oil prices, we really suffer because we import so much oil.
That's right. But there's a sweet spot because last decade too, until the price of oil really broke back above 2007 highs of about $70 a barrel. Until then, the high price of oil did not really affect India that much. So this sweet spot, I think, is very critical, something we spoke about last year as well. And at this stage, if the price of oil falls further, that really is going to be bad news, because that would be further evidence that the global economy is very weak, and that the US economy, which has been one of the few sources of strength in the last few years, is at the risk of facing some sort of an oil bust, which will have major investment implications for the US manufacturing sector.
So just let me get it clear. Too high, like $120 a barrel, India's in deep trouble because we import so much, our balance of payments gets smashed, we're in deep trouble. Too low, we're in deep trouble because the global economy demand is weak for Indian products and we have a decline in our exports. But somewhere around a sweet spot of 60, 70 is good for India and good for the world.
Yeah, because exactly. So I'd say like if the oil price sort of like anywhere between possibly 40 plus from now, or it gets back to 60 or something like that, is okay for the global economy. It is not bad because it suggests that the global economy is in relatively healthy shape. Now, of course, if it goes back above there because of some geopolitical tension, that's a different issue. That's not good.
Yeah, that's
bad. But if it naturally goes back up to $50, $60 a barrel, then I think it would suggest that the global economy is in much better shape.